Today is Wednesday, June 26th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and Edward Iskra are joining us on today's show. But first, let's see where the market stands as we are seeing fresh highs for the year. The cryptocurrency index CCI 30 has surged above the 5,400 point mark. The index is now up by nearly 20% so far in June. Its gained measures at a massive 150% year to date. The 30-day Bitcoin volatility index slipped towards the 3.3% mark yesterday. It has not ventured south of the 3% line since May 14th. The CoinMarketCap website's updated 24-hour traded volume indicator is approaching the $100 billion territory, indicating extremely active trading. The Messari website's so-called real-time volume has surged as well, as it stands at more than $6.2 billion. The Bitcoin dominance indicator has surged towards the 62% mark. The last time it was this high was in December of 2017, before crashing as altcoins did indeed surge. The top 5 digital assets are trading mostly higher, but Bitcoin leads the rally with a double-digit jump. The top digital currency has continued to print fresh 52-week highs as it approached $13,000. Ether has jumped above the $330 mark. XRP is trading slightly up as it approached the 48-cent zone. Bitcoin Cash holds on to the 4th position by market cap as it trades at just under $490. And lastly, Litecoin has been trading mostly sideways over the past week near the $135 territory. The Coin 360 heat map shows that Bitcoin and Ethereum are leading among the large caps. There is a bit of red among the altcoins. According to the Token Spread website, there is an arbitrage of 1.5% between the Bitstamp and CEX exchanges. Both the XMO and CEX exchanges have the biggest spread for the Bitcoin dollar pair, and it is less than 0.1%. Let's now take a quick look at some of the characteristics of V Systems. It is a blockchain database cloud project that aims to create a brand new digital economic era. It is expected to deliver the world's first object-oriented general-purpose distributed database that is empowered to operate decentralized apps. The network runs on a proof-of-stake consensus mechanism, where holders of the VSYS coin take up the role as miners through leasing their coins to nodes. The coin currently trades at 16 cents. Its ICO was launched earlier this year, and the digital currency was sold for 2.6 cents. We will now review the performance of various cryptocurrency asset classes as grouped by the Messari website. The infrastructure group shows the top increase of just under 1%. There is mostly green across the table. The media and entertainment category is down by 3% as there is plenty of red. The financial sector posts a decline of less than 1%. Assets are showing a generally mixed picture performance. The currency category is up by nearly 1%. Bitcoin is the major bullish driver here. And lastly, the services section has gained less than 0.5%, as there are both plenty of increases and drops to see. This is where the 5 major cryptocurrency categories stand so far this Wednesday. We will now provide you with an overview of the most significant moves among the top 100 digital assets, and we will then be back with our crypto experts after the short break, so stay tuned and do not go anywhere.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
We are back with our crypto experts, Edward Iskra, board member at Bitcoin Gold, and Jason Fernandez, COO and co-founder of AE Token. Guys, great to have you. Thanks so much for joining us today.
Great to be here. Thanks.
Always a pleasure. Now, Edward, we're going to come to you first. We are still yet to see a healthy pullback as Bitcoin shot up by double digits to approach the $13,000 mark. This is a territory where the asset last traded during the previous market bubble. So we were talking about this earlier, but I want to get some more information. So what are your takes on the recent moves?
So I'm obviously very bullish in the near term and long term on Bitcoin. So I think this is just market gains that we should have seen over the past couple months and perhaps would have if crypto winter had not lasted so long. But I am one of those people who is getting a bit concerned about the upside volatility in the market. This is a little too bullish for my taste. I would much prefer to see a healthy pullback, and I have some concern that it's a bit like an elastic band. The harder we stretch it, if we jump up very dramatically, the harder it might snap back at us, and that could hurt people. That could cause a lot of downside momentum. That'll cause a fluctuation short term. Now, in the relatively medium term, in several days, weeks, I don't think it'll hurt Bitcoin price if we see that happen. I think we'll see it snap below its true level and snap back above its true level, and it'll sort of bounce around and find a new actual reasonable price level, sort of price discovery. That's the way it works. The problem is that those up and down movements are so sharp that a lot of people will get hurt in the process. That's how FOMO burns people in an up market, because although the market may be up week to week and up every 3 days, it can snap down quite hard, especially when things are accelerating too much on the upside, and some people start taking profits, and then it snaps it downwards, and bots overreact, and people's margin positions get liquidated because they've overextended in hopes of matching the last super bubble that we had. I have concern about people getting hurt. I would much rather see a steadier rise than what we're seeing. I mean, we're all used to seeing Bitcoin prices grow hyperbolically when we look at linear charts. But today, as I look at log scale charts, it's still looking hyperbolic. I still see the rate of increase increasing. So that's putting me into concern territory. But I'm still bullish. I still fully expect Bitcoin to be higher a week and 2 weeks from now than it is today, even if it snaps to be down lower by a couple of thousand over the next few days.
Okay, but you definitely want that pullback to happen soonish rather than later, so it's a healthy pullback there. Okay, very interesting. So Jason, what are your thoughts? Do you also share a similar concern here?
Overall, yes, I'd agree. But in the meantime, I'd say happy days are here again. So as you pointed out, Bitcoin hit 13K, but it's since slid back to the mid 12,000s. I think I have no doubt that it will recross the 13K mark over the next 24 hours, more than likely. One thing that's interesting is a lot of people have speculated this is all about the Facebook coin, and this is all about this rise has basically been attributable pretty much solely to Libra. But Bitcoin was already trading over 9K long before Libra was actually announced. It was already up some 200% in 2019 on the backs of escalating tensions between the US and China. and also the turmoil in the Hong Kong political scene. The clearest sign that Hong Kong significantly helped Bitcoin price was the fact that Bitcoin was trading at a premium in Hong Kong exchanges. So that said, I think the FB news has sort of helped send it into the stratosphere, at least for right now. And yeah, I agree. I think to some extent a healthy pullback would be good, but I don't see that happening at least in the next 24 hours.
Okay, so no pullbacks in the next 24 hours. That is very, very interesting news there. And I guess very good to point out really some bullish drivers in your opinion, Hong Kong and Facebook there. Now, Edward, we're going to come back to you. With these recent gains, do you expect the all-time high to fall sometime soon?
I do expect the all-time high to fall this year. I won't put money on whether it's going to be, a month from now or 4 months from now, but I feel fairly confident that it can go down. Let's face it, we're going into a bull run from a higher base than we did last time. The last time I bought a little Bitcoin and watched a bull run begin was January of 2017, and back then we were able to buy Bitcoin for the $700 level. We never came back anywhere near that. We stayed 3-4 times higher than that, even with the worst of the bubble exploding and driving prices down for almost a year. So yeah, there's lots of potential to rise. If we do a proportional rise to last time, if we have the same kind of FOMO peak, it could be easily 4 times higher than the 20,000 we almost hit. This is another way of saying, John McAfee maybe shouldn't be quite so worried. There are lots of people who made massive price predictions, some of them 2 years out from now. I've seen new price predictions coming out for 2020 and 2022. A lot of these people are going to feel a lot more secure in their upside price predictions, given how much we're seeing the movement now.
Okay, and I think you make an interesting point, because people talk about the crypto winter, they talk about all of this, and you say, well, actually, it didn't go back down to 700, and absolutely true there. Now, Jason, of course, let's hear your thoughts on this.
Yeah, I do actually expect the all-time high to fall. I think you hear about those stories of couples that break up, and then when they get back together, they go straight into getting married. And that's what I think is somewhat similar with the whole Bitcoin situation. Edward mentioned the whole rubber band theory, but I think that also counts for the fact that we pulled back from 20,000 at some point, and I think when we get back, it's going to be somewhat of a vengeance. So I think Edward said probably not, that he doesn't really know, he doesn't want to put money on exactly when he thinks the Bitcoin would get up to, like, let's say 20 or past this all-time high. I would probably guess, although again I wouldn't put money on it, but I probably guess it would happen in the next month or so. And I think what would end up happening, I think a good way to look at it would be it would probably hit something like 20,000, at least its all-time high, before you have FOMO setting in, and so you'd have probably an extra bump of, let's say, $3,000, maybe up to $5,000, and then you would see a pretty large pullback, maybe just under 20,000, and hopefully it would slowly inch back up past 20,000 and then and beyond. I mean, there are people probably predicting 50,000 by the end of the year, and that's certainly possible. Although it probably wouldn't be in the best interest of a long-term gain. But yeah, I think it's possible. And I think in the next month or so, you could see it cross its all-time high.
Yeah,
so,
if I could just add on to that.
Of course you can, please do.
Jason's very right to point out the comparison to the last time this happened. The last time we were at the $12,000, $13,000 price level, and as I look, it looks like we're going to possibly touch it before the show ends, the 13,000. But the last time we were at these levels, it wasn't months before we got from 13K to 20K. It was more like a matter of a week or so. I don't remember the exact number of days, but it was fairly quick. So things can escalate quickly. Bitcoin is up, I think, 45% over the last month, the last 30 days. And it only needs to go up another 55% or so again to break the $20,000 mark. So I mean, it's possible that we hit it quite soon. One of the concerns I have, though, is 20,000 is already a huge psychological threshold for people. There are a lot of people who like to take profits when we hit an even $1,000 mark. 10,000 was a big psychological threshold on the way up last time. 20,000 will be a huge one this time, not just because it's the even $20,000, but also because everybody knows that's what we touched last year before it collapsed. I think we might have a lot of people pulling profits out and pulling money out as we approach 20,000. So I'm not at all convinced we're actually going to touch 20,000 before we see a pullback. I suspect we'll see a good pullback as we approach 20,000 because that sort of the jitters of the last bubble bursting will set in, and we'll see the price pull back and restabilize before it takes off again.
And this is something that we Please do go on, Jason, please.
Okay, I just want to add to that if possible. I mean, I think, yes, that's true. There's going to be some people that are going to be taking profits, but I also think that you're going to see massive FOMO. I mean, anyway, we're on the, Bitcoin is being talked about on CNBC. Pretty much every mainstream news network is talking about Bitcoin. When you cross the all-time high of 20,000, you can only imagine what that's going to do. And you're going to have a lot of new people, a lot of people that have, left the market jumping back in. And that is what I'm thinking will push it up to 23. And also, yeah, he made a good point about it could be a week, it could be less than a week that it goes from like 13K to 20,000. But the reason I said a month is I think that would be a better number if it grew gradually from something like 13K to 20,000 within a month.
No, I fully agree. Once we break 20, FOMO will probably set in.
And I think you're both absolutely right when you say when it hits 20K, people will be pulling out, because that is something we're hearing a lot of. So I just want to move on slightly, because there was a whale alert about a transaction of nearly 9,000 Bitcoin transferred to a Coinbase exchange. So Edward, this move was followed by a sharp rise in the price. So does this move actually suggest that more BTC is needed due to high demand, or that there might be a big move out of the BTC positions?
Well, it's hard to say that more BTC is needed due to high demand. I mean, the market takes care of that. It raises the price, and that attracts BTC to come in and be sold. So it's valid, though, to ask, is more BTC needed depending on what sort of trading strategy you're operating. So, for example, I don't know if this happens to be a large arbitrage organization, but they may need more BTC on the Coinbase side of their arbitrages, so they could be moving funds around. But it could also be someone who is a large holder of BTC and has decided that they want to be ready to either pull some of it out to cash, because every time we see these rises, there's more and more potential of a pullback, so people are more and more likely to prepare for that. Or it could be someone who's just looking at diversifying into other assets. Coinbase for a long time was known as being just a 2 or 3 asset exchange. Well, now they've got a small handful of assets, and they're planning to list more. So it's entirely possible that the money going in there is just preparing to move off into other assets. We know that pretty much every coin has been trailing BTC during this massive rise over the past month, but in recent days, some have been beginning to pick up. Ethereum has been performing really well over the past day or two, and we can expect that to begin to happen with other coins as well, but that can't happen unless people who have large troves of BTC move it onto exchanges so that they can trade into these other coins.
Okay, and I think that's also a very interesting point, I guess, because people talk a lot about how Bitcoin is affecting the other altcoins. So very positive to hear that. Now, Jason, we're going to come back to you. Can you just give us your thoughts on this for us?
Yeah, so I don't think necessarily that it means that Bitcoin is going to drop. Although we have seen that in the past, as Edward said, it's quite possible that somebody is moving Bitcoin. First of all, there's not enough information about this transaction, so we don't know who did it, obviously. Right. We don't know why it's done. But as Edward was suggesting, it's quite possible that somebody is moving it into an exchange so that they can actually trade into altcoins. On the other hand, they could be moving it into an exchange in order to withdraw some of that, and that would obviously not bode well for Bitcoin. So there's really not enough information to really understand why that's happening. But those are my thoughts in general.
Now, Jason, we're going to stick with you because you are currently at the next block conference in Thailand. So tell us, how's the event going? And is there anything particularly interesting that's actually stood out for you that you want to share with us and, of course, share with our viewers?
Sure. Well, it was a really interesting event. They had some really excellent speakers. One of the things that really struck me is that they had a few pre-events, and at the pre-events, you could actually use Dash to pretty much make payments, and that's not just because of this particular event at that particular location, but they had this pre-party. It's pretty much all around Thailand. So the Dash Thailand team has just been going gangbusters, really signing up merchants and essentially getting Dash accepted pretty much all around Thailand. Now, the next thing that they're working on, so I had a little chat with them, the next thing they're working on is launching something known as Dash Next, which is supposed to be a business development partnership for a unit for Dash in Asia and beyond. And so the idea is to sort of leverage local networks for payments on all verticals. So that includes like travel platforms, point of sales, debit cards. But I was actually really surprised at the level of adoption that they managed to achieve in a place like Thailand without a whole lot of press. I mean, we really haven't heard a whole lot of it. But having spoken with them, they said that they've been expanding all over. So they're one of the coins I'd be looking out for in the future.
So much coming from Thailand. How exciting. Absolutely brilliant, really, just because you're there right now. So that's absolutely fantastic. And Jason, I want to stick with you for the minute because while we are waiting for the Bakkt platform to go live, LedgerX has obtained an approval from the CFTC to trade Bitcoin futures that are settled in the digital currency. So, Jason, what does this mean for the markets? And is this a signal that approval for Bakkt might follow shortly as well?
So it's actually really surprising that a company like LedgerX was able to actually get it before Bakkt. That's kind of interesting that they were able to do that. One of the interesting things about at least what people are saying about this deal is that LedgerX's license is sort of is likely to be fully collateralized, which means that you can't legally trade them on margin, and that raises questions about whether you're going to have adoption, particularly from non-retail or institutional investors. So that's one of the things that's something to think about. Also, they will also only offer Bitcoin futures as opposed to like a range of cryptocurrencies. So they basically focus on Bitcoin. Meanwhile, you have like Bakkt, which has been seeking a license to operate as a trust, and they're preparing to offer a 1 month and 1 day physically delivered Bitcoin futures contract. And the way they've set it up, at least that's what the rumor is that their contracts will be margin futures, which is basically a lot more favorable to, again, institutional investors and more sophisticated investors. But certainly, I'm going to jump right now, and I think this is a game changer. I mean, this is like the first start of Bitcoin futures. I think Bakkt is coming next. I think that certainly LedgerX, the fact that LedgerX was successfully able to do it indicates that Bakkt is probably right behind it.
Okay, well, that is very positive news given the delay that we have seen. So we're going to go back to you, Edward. What are your thoughts for us, please?
I generally agree it is positive. I think Jason actually alluded to part of the reason why LedgerX got their approval before Bakkt. A big part of it is that they're not planning to be offering margin trading, so the commission is going to be a little more lenient and require a little less diligence before allowing it to open up to the public. Also, what helps LedgerX is that they already had existing swaps and options, and behind their swaps and options, they also had a clearinghouse. They already have a license to be a physically settled, well, not a physically settled. They have a license to be a Bitcoin clearinghouse to hold Bitcoin as a custodian. So they have the underlying infrastructure. Bakkt does not have that. Bakkt is still waiting for New York State to approve their actual settlement clearinghouse. So you can't do physically settled contracts until you can actually handle the physical settlement. And just to sort of explain the difference between futures options and actual physically settled. I don't want to say physically settled. There are two kinds of futures. There's cash settled, where when the contract comes due, you're given your gain or loss in dollars. That's cash settled. But there's also physically settled, and it's called physically because most normal commodities from the past, things like cattle futures, you would physically receive the cattle. So if you keep the contract, and there's a famous story about a futures trader who accidentally failed to close out his futures contracts, and he got a phone call from a truck driver who couldn't get up his residential street with his truck full of cattle. But if it's physically settled, it means you receive the actual asset. So what we're going to see now from LedgerX is a physically settled system. So when you buy a contract for these Bitcoin, you will end up receiving them if you hold the contract through to expiration date, well, to settlement date. Or for that matter, if you want to write a contract, you're going to put your Bitcoin on deposit so that if it gets to closing date without being sold off, then you will deliver those Bitcoin. And that's part of what makes this more tenable to places like the CFTC. If you've already got the assets handled and you've already got swaps and you've already got options, this is just the last piece of the puzzle to offer the physically settled contract.
Well, Edward, thank you as always for going into the extra detail and just explaining those differences there. It's always a pleasure. Now, Jason, we're going to come back to you because Bloomberg Japan reports that JP Morgan will start trials with its digital currency very, very soon. So does this signal that regulatory approval is imminent for this project?
So yeah, so there hasn't been enough information for them to actually say what their plans are. But basically, what they're doing is they're doing testing in assuming that that regulatory approval is imminent. So I think clearly they would have some degree of information. I mean, this is a really, really large corporation, and they're not going to just start testing unless they feel fairly certain that regulatory approval is coming. But I doubt that they actually have word because the government is likely to keep this pretty close to their heart until they actually release information. So I don't think they have any inside information, but I think overall, at least their analysis certainly seems to feel like that regulatory approval is imminent, which is probably why they're doing testing and probably going to launch soon, I guess.
Okay, thank you for your thoughts. And Edward, we're going to go back to you here, please.
Yeah, I agree. Bloomberg's reporting is usually solid. They usually do the background necessary to know if they're giving good information. So I'm sure JP Morgan is doing the testing, but that doesn't give us any information about approvals on the regulatory side in any particular country. You know, this came from Bloomberg Japan versus Bloomberg US. The thing to remember is that a large organization like JP Morgan will be super, super careful and do a lot of testing before they launch a product, both because they need to manage their internal risk and because they want to make sure they get regulatory approval. So they're liable to be doing a longer slowing testing process than some sort of, you know, more entrepreneurial startup sized company would be doing.
Okay, now just finally, is there a big role for ATMs in the future where money is expected to be digital? So Edward, we're going to go back to you. What are your thoughts for us finally?
Sure. There's definitely a big role for cryptocurrency ATMs and Bitcoin ATMs. Now, they're not new. They've been around for years, but they've generally been relatively inaccessible, relatively few and far between, and they weren't in prominent positions. I think in this wave, as we're seeing more Bitcoin ATMs and crypto ATMs deployed by a variety of different people, I'm hearing about a lot of small entrepreneurs. I have 10 ATMs. I have 50 ATMs. We're going to start seeing them in more and more prominent places, and that means that not only is it more accessible to people who want to, you know, start investing $100 a month into some sort of cryptocurrency, or someone who just needs a little bit of cash because they're shopping and they hold a lot of cryptocurrency. It's not just the convenience, it's the fact that it's out there in front of people all the time that makes people think, oh, this is a normal thing. This is something people do day to day. You know, it was a long time before credit cards were fully accepted, but, you know, once everybody had debit cards and everybody saw there are ATMs everywhere that they could use to pull cash if they actually need cash, people were a lot more willing to carry no cash because they knew they had their debit cards. We're going to see the same trend happen with cryptocurrency. When people see crypto ATMs everywhere, they're not going to say, oh, I'm not going to carry cryptos because I can't use them. They're going to think, oh, well, if I come across one of those strange little companies that won't accept crypto, I can still pull out cash.
I see. So such an incredible use case for it. I think we can hear your dog barking in the background there.
Beauty.
Very, very sweet, very sweet. Now, just finally, Jason, we're going to come back to you. Do you share a similar view to Edward here?
Yeah, totally. I totally think that there is a use case for ATMs in the future. Not only because it keeps everything front and center to where people can, it's forefront in people's minds, but also it all comes down to, we talk a lot about UI and UX, right? User experience. And one of the main problems with crypto, one of the main things that is holding it adoption back is just really poor UI and UX decisions, and basically the user experience of buying crypto, holding crypto, crypto is just way too complicated for the average person. I mean, I was speaking to somebody today who was saying that they send over some XRP to Coinbase without the required information, without all the information, and basically his money, it's something like $3,000 worth, which is not a small amount, particularly for this guy. That essentially the money was just sitting down in limbo and hadn't really been credited to anybody. So these are sort of situations that really should never happen. They should never be a way to actually transfer money where it actually doesn't get to its location. So the ATM basically solves some of these problems because it's a much simpler experience. Once you actually sign up, which might take a little bit longer using the system to get like a wallet, it takes less than like 15 seconds to scan a QR code, take in for the machine to take in the physical notes and send fiat currency into the machine. So that's pretty darn quick. And it's sort of like a three-step method where you scan the QR code, you insert the notes, and click the send button. And that's sort of so it's the transactions that are made via Bitcoin ATMs are sure safe and secure, but just so much easier. The experience is so much easier and less complicated. One of the things that they need to figure out is fees. I mean, there's a huge markup in general with these ATM machines, something as high as 30% in some cases, and that is not going to really make it a sustainable business long term. But I don't think it needs to be. I think it just needs to be a sustainable business in the short term, because once the sort of interaction around Bitcoin and the user experience and using Bitcoin starts, and other cryptocurrencies start improving, the need for these Bitcoin ATMs is at least in terms of making things simpler, is going to sort of go down a little bit, and that's sort of an effect of the things getting better overall for crypto in general. And at that point, they probably won't be getting these massive 30% markups, but it probably won't be necessary because they'd be having so many. What they'd lose in percentage on individual transactions, they'd make up in volume because so many more people would be buying crypto. So yeah, absolutely, I think that there is a role for ATM machines, Bitcoin ATM machines in the future, crypto ATM machines.
And I think you're absolutely right when you talk about how complex it is and how difficult it is, because that's always a barrier that comes up when we talk about mass adoption. So Edward, Jason, thank you so much. As always, it's been an absolute pleasure having both of you on the program with us today. Thank you.
Thank you.
Thanks, Leah.
Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has remained at an elevated level of close to $365 billion. Trading activity has continued to increase, and the Coin Market Cap website's daily volume has surged past the $100 billion line. Bitcoin remains as the top performer among the large caps with a double-digit surge. Well, that is all for this Wednesday's Crypto Now live show. We thank Edward and Jason for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.